Imagine this. What if you had $1,000 right now? Or better yet, a whopping $10,000. How are you going to spend it? Would you take a break and go on a vacation? Would you treat yourself by buying that expensive thing you've been thinking about? Well, whatever it is, instead of wasting all that money on flashy new things that would probably only satisfy you temporarily, why not try and invest it? Today, we'll be sharing with you different ways to invest $10,000, which, if properly invested, has the potential to grow even more or significantly change your life. But before that, make sure to like and subscribe to the Inlet Financial Coaching channel. Now let's get started. You could use the $10,000 to settle any existing high-interest debt, which is a notable thing to do. For example, you may have a high-interest credit card loan as of the moment. You ought to think about paying it as soon as you can. A high-interest debt costs you money, and if you pay it in full, you'll be able to save a lot of money. The reality is that debt is not always bad. Next up, one of the most dull but sensible and likely safest options on where to invest that money is on an emergency fund. Yes, having an emergency fund may sound boring or unexciting, but it could ultimately save your life, especially during difficult economic times. The savings you have set aside for rainy days or other situations where you might require immediate cash include emergency funds. A good rule of thumb is to maintain 3 to 6 months' worth of current expenses on hand. If your business fails or you end up losing your job, you can utilize this money to cover your expenses rather than taking out loans and accruing debt. Keep in mind that paying excessive interest rates on your loans can financially paralyze anyone. Therefore, having an emergency fund on hand could serve as insurance and could help you save a significant amount of cash in the event of an emergency. The fund should ultimately be as liquid as possible. We advise keeping money in a savings account or purchasing short-term treasury bills with a 3-month maturity. In order to be able to convert the money into cash at any time, it is important to make it as liquid as possible. After creating an emergency fund for yourself and paying off that high-interest debt, you can now consider investing in your retirement accounts. The Roth IRA, the HSA, and the 401k are the 3 primary retirement accounts which we will be talking about. You can contribute after-tax contributions to a Roth IRA and then watch it grow until you're 59 and a half years old. This account's positive aspect is that its growth will be entirely tax-free. If you're under 50 years old, you can contribute $6,000, and if you're above 50, you can contribute $7,000. For the second retirement account, we have the Health Savings Account, or HSA. Your contributions as well as earnings in this account are never subject to tax. It's among the most tax-advantaged plans available right now, but it's also the least discussed. It's been kept a secret, if you will. The only restriction is that you can only use the funds you withdraw from this account to pay for medical and health-related services. However, because we will all eventually get old and likely have higher medical bills in the future, we advise you to make some investments in this account. Conversely, the 401k is a more conventional retirement account. Each contribution you make is entirely tax-free, but once you reach retirement and withdraw your funds, you'll be responsible for paying taxes on the whole amount. The drawback of the 401k is that, in comparison to the Roth IRA, you often pay more tax at the end on a higher amount of capital. Purchasing certificates of deposits or CDs, or perhaps even bonds, is another investment option outside of retirement accounts. These investments offer a fixed yield and low level of risk. The higher yielding long-term maturity bonds should be your choice if you want to optimize your gains. They typically yield between 3% and 5%. Your investor profile will ultimately determine if you wish to choose this fixed return investment option. While younger investors prefer other riskier investment paths because they are aiming to build their own fortune, the majority of older investors adore the idea of a fixed return. Real estate is the next investment option you may consider with your $10,000. In real estate market, it is pretty simple to leverage your investment. You have the choice to invest in REITs or real estate investment trusts, in addition to actual physical properties. They operate similarly to mutual funds, where a group of investors come together to buy a specific property, with the rental revenue from that property distributed to them as dividends. The REIT unit's value will rise along with the underlying property value, and you will generate a capital gain on it in proportion to the amount you invested. To those of you who wish to accomplish something significant with your $10,000, try this last investment option. Consider investing in index funds if you're thinking about making a small fortune for yourself but don't want to take too many risks or do anything outrageous. Index funds follow the broader market and hold a modest number of stocks across many industries. Compared to bonds or certificates of deposit, it offers you a lot greater long-term growth and diversification. An index fund investment is what you might refer to as a passive investing approach, and as a result, the fees are incredibly low, making it a very cost-effective option for the investor. An index fund also has the benefit of being easy. You don't need to take your time choosing an individual stock. When investing in individual stocks, you wouldn't actually have to try to time the market. In the end, purchasing a total return index fund only requires a few clicks and you're done. If you find investing in index funds to be a little predictable and you're looking for even bigger returns, you should consider buying individual stocks. As we all know, individual stocks investment may be quite risky, but it has the potential for the highest returns. If you're under 30, purchasing individual stocks is the ideal course of action for you because you have the luxury of time to let your portfolios grow over a 20 to 30 year investment horizon and take advantage of significant capital gains. Younger investors are less concerned with possible market and price volatility that may happen along the way because they also have bigger risk appetites. Individual stock purchases are a wise choice if you have a flair for investing. We would also advise you to invest in individual stocks through your 401k or Roth IRA plans. In this manner, you will also save money on taxes. But you have the opportunity as well to open a free brokerage account. Individual stocks are the best option for you if you are skilled at choosing stocks, you're patient with them, and don't constantly worry about price changes. That concludes today's video, which we hope you enjoyed and learned something from. If you had $10,000, what would you do with the money? Please let us know in the comments section below. And if you liked this video, don't forget to give it a thumbs up and subscribe to the Inlet Financial Coaching channel if you haven't already. Thanks for watching, and we'll see you in the next video.